The analyst behind the note joins us now. Evercore's head of internet research, Mark Mahaney. Why are you not worried about the FTC and what we got yesterday?
Well, no, this FTC is a serious issue, and I'm not judging whether or not Amazon made Prime cancellation complicated or not. I think if you go on there and try to cancel your Prime subscription now, it's very easy to do. And I think the more important thing is that the satisfaction levels that we've tracked at Amazon in the U.S. over the last dozen years have always been extraordinarily high. People choose Amazon because of price, selection, and convenience, and the gap between how consumers rank Amazon and other online retailers is extraordinarily wide and has been for a while. So they deliver good service to customers, and customers respond by signing up for things like Prime, which can save people a lot of money.
So does the FTC suit represent a threat, in your view, to the business?
I don't know. I'm a little bit out of my league on that one in terms of the legal risk. I'm guessing not. But I guess what I really focus on is, are consumers happy? And we see this 94% of U.S. consumers continue to rank Amazon as their favored online retail site. And it's been very consistent for a decade. Now, what I find interesting in terms of Amazon, we have a triple trough thesis on the stock. We made it one of our top 3 picks recently. It's because we think margins have troughed, revenue growth has probably troughed, and we think the multiple almost certainly has troughed. But I'm particularly interested in what I call shipping elasticity, the idea that the faster you ship, the more the people will shop. And what we found in this report is that Prime customers who use same-day shopping, you order it the night before, you get it before 7 in the morning, you order it in the morning, you get it in the afternoon. Those people spend well over 2 times as much as 3 times as much as an average Amazon customer. So as Amazon continues to roll out faster and faster shipping, and they talk publicly about doing this, I think you're just going to see more and more spend. Amazon's ability to gain share of wallet, gain share of purse is going to continue to increase. It's a real accelerator in terms of Amazon's market share in the U.S., this same-day delivery for Prime customers.
Yeah, the bulls have been all over this last few days, Mark. I see a note today about how they're not behind in AI. Loop up their target, basically saying AWS revenue deceleration comes to an end, but that the real driver is going to be unit economics in retail. Do you agree with that last part?
Actually, Carl, I don't. I think it's going to be pretty equal. I think you need to have that in order for the stock to move materially up from here, you need to have AWS growth reaccelerate. We think it will, starting in the back half of this year. And you need to have ongoing recovery in the retail operating margin. So it's both of those. By the way, I think you're going to see that in the retail business. I mean, Amazon's retail business had negative margins last year, the first time in a decade. But that's because there were such enormous cost shocks that Amazon took on. Fuel, labor, shipping, fulfillment costs, et cetera. Just everything went against them last year. So you're comping against that this year. But also they had this massive fulfillment center build out in the last 2 or 3 years. Well, they're starting to increase capacity utilization. Rising capacity utilization means rising margins. So I'm probably more confident in the margins recovering and in the positive unit economics getting more positive than I am in the AWS reacceleration. But I think both will happen. And as they do, you'll see a re-rating in the stock. It's one of the reasons why there's a lot of torque to the upside on Amazon stock, even here.